This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Stocks and futures fall as Friday's surprise jobs report sparks concern of ongoing Fed rate hikes. The yen weakens on a Nikkei report about a possible BOJ succession. The U.S. launches a mission to salvage what officials believe to be spy equipment from a downed Chinese balloon. Beijing says it reserves the right to respond as tensions flare. Plus, a powerful earthquake in southern Turkey kills hundreds in the region, with many more injured and trapped. The quake was felt as far away as Lebanon, Israel, and Egypt. We'll have, of course, a full report from our reporters on the ground in Turkey, but let's also look at market sentiment. Now, this is on the back of geopolitical tensions between the U.S. and China, and on the back of that surprise, very strong report, jobs report out of the U.S. on Friday. Now, on the back of that, there's, of course, more priced in terms of Federal Reserve hikes. Not only Federal Reserve, but this could touch a lot of the other central banks around the world. If the economies hold on stronger, certainly the labor part, because of these tight labor markets. European stocks down 0.6%. U.S. futures, certainly the S&P, also seeing similar declines. And then there's concern over the U.S.-China geopolitical tensions weighing on sentiment overall. U.S. dollar is one we need to keep an eye on, as is, of course, sterling. We're going into about 100,000 nurses and I think 10,000 ambulance workers striking this week. Sterling 120.59. Now, there's not a huge difference in terms of what we're seeing for the FTSE or the DAX or the CAC 40. They're all down between 0.7 and 0.8%. We'll keep a very close eye on anything that's happening on markets. Now, hundreds of people have been killed in an earthquake that hit along the border between Turkey and Syria. The quake damaged highways, an airport, and the local natural gas network. Onur Ant, Bloomberg's Turkey Bureau Chief, joins us now. So, Onur, what exactly is the latest on rescue efforts?
As you said, Francine, more than 500 people have been killed in the earthquake that took place this morning, and there are hundreds of more trapped in buildings. According to Turkish authorities, more than 1,700 buildings collapsed on the Turkish side of the border alone. That means the death toll, which now stands at over 500 for the two countries, is likely to see a dramatic rise in the coming hours. And rescue operations are underway in Turkey, as well as international aid assistance is also on the way from countries like US, Israel, and Azerbaijan.
So, Onur, why have oil flows to Mediterranean ports been halted?
Turkey did halt the oil flows to Ceyhan oil terminal on the Mediterranean coast. This, according to Turkish officials, is out of precaution. No leaks or damages have been detected on the oil pipeline. Still, though, they did halt the oil flows just to be sure. And to be clear, that terminal gets oil both from Azerbaijan and Iraq. And back in January, the daily average oil flow was about 1 million barrels a day.
So, Onur, what international help has been offered so far?
So far, US, Iran, Israel, India and Azerbaijan, as well as European Union, have all offered help. And Turkey's Interior Minister Süleyman Soylu, for the first time in recent memory, as far as I can recall, has said that Turkey activated a level 4 alert. That basically means that Turkey is open to international assistance, and rightfully so. The area that we're talking about is home to millions of people, nearly 10 million. The temperatures are terrible there right now. We expect snow in the coming hours and days, so it's a race against the time, and Turkey needs to keep the victims of the earthquake out of the area and into shelters as quickly as possible.
Onur, thank you so much. Onur Ant there with the very latest, of course, on this extremely sad news, and all of our best wishes goes to the family and, of course, to the rescuers that are there on the ground. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The yen fell on a report BOJ Deputy Governor Masayoshi Amemiya has been approached to become the central bank's new chief. The Nikkei says the government and the ruling coalition held discussions with Amemiya on succeeding Governor Haruhiko Kuroda, whose term does end in April, but the government has refuted that report. Now, Dell has become the latest tech company to announce massive job cuts that will eliminate a little more than 6,600 jobs, about 5% of its global workforce. Dell is facing plummeting demand for personal computers. Beijing has shifted from expressing regret to threatening retaliation after the US shot a high-tech Chinese balloon out of the sky. China says the device was a civilian climate research vehicle that unexpectedly drifted over US territory. Beijing has denounced what it calls Washington's clear overreaction in using force. Secretary of State Antony Blinken postponed a scheduled trip to Beijing, calling the balloon an airspace violation. And Beyoncé is now the most decorated Grammy winner in the awards show history with 32 wins. It's after the singer won 4 awards, including for Best R&B Song. That's thanks to her album Renaissance. But she missed out on the top prize, losing out to Harry Styles, who walked away with the Album of the Year honor. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, the U.S. added more jobs in January than expected, while the unemployment rate fell to a 53-year low. Now, Bloomberg TV guests have been weighing in on the latest data and what it actually means for the Fed.
This is yet again a soft landing type of report.
Totally on fire.
Undoubtedly a strong number.
Wow. Stunning, awesome, great for the economy.
It's still a labor market that is too hot.
The job market's likely to remain hot, posing a real challenge for the Fed.
The market's been pricing in Fed easing in the second half of the year. These numbers don't really support that.
The Fed still has more work to do than the markets think.
They should have done 50 and then stopped.
The Fed should go 50 and get out of the way and let the system do what it's going to do.
The Fed's not likely to revert to very large rate increases.
All they can do at this point is just sort of extend out the 25s.
The possibility of a policy error here is quite significant.
Well, joining us now is Geoff Yu, Senior EMEA Market Strategist at BNY Mellon. Geoff, I'm so happy to speak to you, especially on a big day like today. I mean, we had this jobs report on Friday that was really a blowout, unexpected. What does it mean? I mean, the markets seem to finally latch on to the fact that, rates could go up even more.
And I think it's about time, to be honest, right? So I think 2 things there. One is, rates need to continue to rise. I think we need to acknowledge the labour market is in a good place. Maybe there are some distractions, from the avalanche of the tech sector layoffs, but the services sector clearly is doing really well. But secondly, it's less about where headline rates go. It's about how long are they going to stay at a relatively high level. I think that's the second phase, which markets, need to be ready for. I don't think they want to price that in yet.
Why? Yeah. Why do markets? The Fed officials keep on saying, guys, and theoretically, you can go from 9% inflation, 6%, but that 6 to 3 to 2 is going to be painful.
Right, indeed. And we think that we will need to see outright declines in job losses, not just 1 month, maybe beyond, for the Fed to even start to think about cutting rates. So the bar is actually quite high there. On the flip side, I think markets also need to acknowledge, good news can be good news. For once, hey, it's a good labour market. US is doing well. China's reopening. Eurozone, slightly better place. So what's not to like? So that may actually push risk on as well.
How many? You're not expecting more hikes, are you? Is it just that they stay at this level for much longer?
So we are expecting to shift to 5%. Maybe higher, but 5, 25, that kind of range, but for it to stay for longer, we've held the view towards the end of last year, even that. So the bar for Fed cuts from whatever level, right, for this year, extremely high, and we still stand by that case.
Geoff, is that, across the board? So is there a pricing or hope in the markets that we're going to see also a BOE pivot, that we're going to see an ECB pivot, which is, if they stick to the 2% inflation target, will not happen for a while?
I think the market's given up on the ECB pivot, to be honest, looking at our own internal flow data. So euro longs are very, very much extended, even though they are hawkish right now. I would say the UK is probably so the BOEs are definitely up there in terms of candidates, for a pivot. I think from the BOE's point of view, all the upcoming hikes, whatever they may be, they're going to be contingent upon data. So there's a lot of downside risk there. Yeah.
So given what you explained so beautifully and simply, what does it mean for where you want to put your money right now? What should strategies be looking at buying?
Short term, I think dollar will continue to be mixed in terms of performance. Again, we're looking for euro dollar to come down ever so slightly, but end of the year, eurozone eurozone is in a good place, especially we're looking, for margins to start to improve eurozone because energy prices are coming off. Sterling, we certainly don't like. One currency I'm looking at closely right now, Swiss franc. Our data showing very, very underheld. So there are shorts out there. It was used as a funding currency, but it's a high beta trade, for the eurozone. S&B have been clear. They can hike rates. They can sell down their portfolio. They can buy Swiss francs as well. I think that's one of the cleanest trades out there.
But yeah. So how do you play actually Swiss franc?
So I think on the crosses that would work best. So Euro Swiss tends to actually go up during a good eurozone time. So sterling Swiss lower. We're looking at Scandinavian currencies lower against the Swiss franc as well. Both BRICS Bank, Norges Bank signaling their peaking rates as well.
Okay, Geoff, thank you so much. As always, Geoff Yu, Senior EMEA Market Strategist at BNY Mellon, stays with us. We'll talk a lot more about yen. Coming up, BOJ succession. The central bank's deputy governor has been reportedly approached for the top job. So we have all of the details next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the yen fell after the Nikkei reported the BOJ Deputy Governor Masayoshi Amamiya has been approached to become the central bank's next chief. The government, though, has refuted the report. Well, let's bring in back Geoffrey Yu. He's Senior EMEA Market Strategist at BNY Mellon. Geoff, thank you so much for sticking around. We're talking a little bit about, of course, Fed dollar trajectory. You said, look, one way to play maybe some of the uncertainties is through Swiss franc. What do you do with yen right now?
So yen, I think it really is becoming binary. The market's probably learnt its lesson. So in two ways. Anything can happen out of the ordinary at BOJ meetings. But secondly, I think with the last meeting or so, it's important not to place too much of an emphasis on an individual meeting, especially with Governor Makoto coming off. But it really is about QQE, not YCC in my view, but QQE. If they abandon QQE, unwinding, so to speak, Governor Makoto's entire legacy, then we can look at another 20 big figures in dollar yen very easily.
Do you think they will? And actually, is it enough? If you look at some of the names that are out there, is it enough to give us a sense of what kind of policy they'll put in place?
If pushed, I'm still at 50-50, right now. I think they should. That's the sense. I think it's more about signaling that Japan is in a new environment with stronger inflation pushing things forward. But we know how, in terms of the relationship between the MOF and within the Japanese government and the BOJ works, things tend to be a bit slower, right? So I think it will take another good quarter or two. We're going to get the appointments very, very shortly. But that is the direction. So dollar yen certainly lower. So that is the direction we're looking for. But getting rid of QQ make the difference between, say, 125 year end and 110.
Geoff, what do you think is priced in right now? And again, we had this big surprise in December. Is like 30% of a possible change in policy priced in or less?
I think a bit more than that, but what kind of a change in policy? So if it's going to be steady increases in the YCC target, I actually don't see that as a change in policy because you're still sort of expanding the balance sheet, right, to tighten. That doesn't really make too much money to reset, right? So, but the chances of a wholesale abandonment of QQE, I think that's actually below 30% or even 20, something like that being priced in. But again, that's where the larger risk reward is for dollar yen lower.
Geoff, let's also go back to the Bank of England because we have Catherine Mann, really one of the most hawkish members of the BOE's 9-member MPC committee. So she's basically saying the BOE's next move is likely another rate rise. We kind of thought last week, and then we caught up with the Governor Andrew Bailey, that it could have been one and done.
So I think on balance, they're looking at the inflation numbers and crucially, they're looking at the risks, right? So he was heavily skewing the risks to the upside, but not pre-committing in the same way that Madame Lagarde was actually doing. So there's the clear difference, between euro and sterling and why euro sterling should trend higher, towards mid-year and year-end as well. So if we start to see, let's say, a sudden sharp deceleration in inflation and forward indicators, which the governor has hinted at, then maybe they will look at a pause. But so far, I don't think they're there yet. 25 basis point increments. I think we can get to 450, not higher for sure. But the risk is going to be still hawkish talk, but less action.
So what are you expecting? 25 basis point hike, and then that's it for the rest of the year? Or they look at, of course, all of the tightening that they had last year and what that means, for example, for the labour market.
They can actually start to space things out. So they do another 25 and then just hold them for a while. So they have, as you say, they have been talking about, let's see what the overall impact is going to be. They stressed that, during the comments, last week, a lot of tightening has really taken place. And also they need to look at the housing market as well. So mortgage resets, that eats into household income.
But the labour market in this country is so tight and, could remain tight for a long time for a number of reasons. What does that mean for hitting that 2% inflation target?
Well, here's where I think the BOE would have to say we have an inflation target, so the jobs mandate, the growth mandate is probably not entirely on their mandate. So if inflation's still well above, then they need to actually move. But then they risk finding out they've done too much only after the fact.
Okay, Geoff, as always, thank you so much for joining us. Geoffrey, you there, Senior EMEA Market Strategist at BNY Mellon. Coming up, U.S.-China tension ballooning as the U.S. shot down the alleged Chinese spy balloon off South Carolina. We have China's latest response next, and this is Bloomberg.
Tuesday, President Joe Biden delivers the State of the Union address. Join David Weston and Bloomberg's top political reporters and analysts live from the Bloomberg headquarters in Washington, D.C. as President Biden lays out his plans to tackle the war in Ukraine, Congress's debt limit standoff, immigration, and more. And stay tuned after the speech as we break down the Republican response. Special coverage starts at 8:30 p.m. Eastern, simulcast on television and radio, only on Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Dell has become the latest tech company to announce massive job cuts. It will eliminate a little more than 6,600 jobs, about 5% of its global workforce. Dell is facing plummeting demand for personal computers. Now, Carlyle Group has a new CEO. Bloomberg's learned the private equity giant has chosen former Goldman Sachs co-president Harvey Schwartz. The announcement could come as soon as this week. Carlyle has grappled with management turnover the last few years. Elon Musk says Twitter is on the right track after a tough 3 months. In a tweet, the billionaire says the company is trending to break even after he had to save it from bankruptcy. Musk says he had to juggle the rescue of the social media platform and handle responsibilities at both Tesla and SpaceX. US-based Newmount has made an offer to acquire Australia's top gold mining, Newcrest. The potential deal values Newcrest at about $17 billion. It comes as Newcrest searches for a new CEO following the December resignation of their old one. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Washington has launched a mission to salvage what U.S. officials say is a surveillance balloon from China after shooting it down off the South Carolina coast over the weekend. Beijing has warned the U.S. to not escalate the situation, insisting that the balloon is a civilian aircraft that strayed off course.
We should stress that this is an unexpected incident caused by the force majeure, and the U.S. Department of Defense also said it will not present any military or physical threats to people on the ground. Despite China's explanation, the U.S. use of force is overreaction.
Now, for more on all of this, let's bring in Bloomberg's Bill Ferries. Bill, what are the implications of this continuing crisis on Antony Blinken's trip to China?
Well, we haven't heard from the U.S. on when that trip will now take place after being delayed, but it will possibly change the tone and what can really come out of the meeting. It will be very interesting when this debris, if it's found, is brought up and the U.S. is able to provide a little more information on where it came from, what companies may have been involved, and what kind of technology it had. And that will all play into the Secretary of State's likely trip to Beijing.
So could there be a retaliatory move from China?
Oh, I certainly think it wouldn't be unexpected for the Chinese to maybe take some initiative against U.S. assets in the Indo-Pacific, whether that's it could be the ships that are going through the region. They're certainly going to try to make the U.S. Maybe look as embarrassed as I think China has in this case. And I think on the U.S. side, if they are able to identify a company that was involved in this technology, the balloon technology, there could be additional sanctions on the U.S. side as well. So I think both sides are trying to game out what the next steps in this crisis will be.
Bill, just remind us, this is not the first time that it's happened. Why is this so extraordinary?
Well, I think the difference between this and previous episodes is that this balloon was spotted publicly over the U.S. While it was still floating. It became a bit of a spectacle and an embarrassment. And I think politically a lot of pressure was put on the Biden administration to somehow to react to this. And so you saw that shoot down taking place on Saturday. In the past, what we've been told is that officials weren't sure where these balloons were coming from, what they were doing. The information came much quicker this time.
All right, thank you so much. As always, our Bloomberg senior editor for Asia, Bill Ferries. Coming up, Tina Lee, Chief Executive Officer of Deutsche Bank UK and Ireland, joins us for an exclusive conversation on attracting the next generation of investment bankers. That interview is next, and this is Bloomberg. European stocks fall as Friday's surprise jobs report sparks concern of ongoing Fed rate hikes. The yen weakens on a Nikkei report about possible BOJ succession. The U.S. launches a mission to recover what officials believe to be spy equipment from a downed Chinese balloon. Beijing says it reserves the right to respond as tensions flare. Plus, a powerful earthquake in southern Turkey kills hundreds in the region, with many more injured and trapped. The quake was felt as far away as Lebanon, Israel, and Egypt. Welcome, everyone, to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Deutsche Bank is looking to attract students in the UK who are interested in investment banking. Now, together with Queen Mary University of London, the German bank has launched a new investment banking apprenticeship program. It comes after the lender announced it's preparing to cut more jobs to keep costs in check. Well, here with us is Tina Lee, Chief Executive Officer for the UK and Ireland at Deutsche Bank. So, Tina, thank you so much for coming on. First of all, talk to me about this apprenticeship program. Did you identify a need to have a more, diverse investment banking group, or is it really to try and entice students to come into the jobs market earlier?
Actually, it's both. So I think all large organisations are looking to tap into different pools of talent. So this programme is going to be targeting students that have completed their A-levels. And probably what's different about this to your normal graduate programme is they'll get a real mix of on-the-job training, either through our origination and advisory business or, in fact, our FIC division as well. So what they'll be able to do is to actually also deliver on the academic module side, and at the end of 4 years come out with a degree in applied finance, and therefore they can then apply for a full-time job at DB.
So is this because you're concerned that otherwise investment bankers have too much of a similar CV, that everyone sounds and did the same education, or is it because you just don't have enough people that you can bring into the industry?
We have plenty of applications, so the number of applications is not our problem. So what we do want to do, however, is really make sure that we have a diverse pool of candidates. So really what we think with the apprenticeship programs is we'll be tapping into perhaps students that have a different socioeconomic background, and most importantly, identifying young talent that perhaps don't have the network of family, friends, or indeed schools that so often help young people navigate the many options that there are in investment banking. So this type of program will help fill that gap.
And are you expecting other banks to really join? Is this going to be a concerted effort to really make a difference, or will it be only 15, 20, 30 students a year?
So I think that lots of organisations are going to be looking at these types of schemes. What has helped, of course, is that Deutsche Bank is subject to the apprenticeship levy here in the UK. So what we've been able to do is redirect that levy into reinvesting in our workforce through programmes such as this.
Tina, you know, on a day-to-day basis, I know that you're going through also a huge cost-cutting program. Like, what's the most difficult decision on how you resize and cut costs?
So costs is an area that we will continue to have a laser focus. We had our results last week, so we already saw our cost-income ratio actually fall by 10% over the full year 2022. But we do have to really maintain a laser focus on costs, particularly with regard to the broader inflationary environment. So we're looking to keep our non-interest expenses flat to 22, whilst at the same time looking to strategically adjust headcount. So we did see a tactical headcount reduction in some of our businesses in Q4 of last year. But more broadly, we think we're actually very well positioned for the cycle at this stage for 23.
What does it mean for hiring? Are there places actually where you could hire and also pay people maybe a little bit more?
Of course, and we always look to remain competitive, and there will be areas that we're looking to grow our businesses. So we will always continue to monitor those products, particularly where there are adjacencies to our existing businesses, where we can also see increased customer demand.
You know, we've had a number of conversations over the years about, you know, what the clearinghouses look like, or the closeness between the UK and the EU post-Brexit. What's it looking like now?
I think we're in very much a steady state at this point. Yes, in 2025, there is steps to sort of move more clearing activity into the EU. But I think at this stage, I think we're very well positioned, and all our planning is now done. So we're very much in a business as usual state.
How has Deutsche Bank changed since Brexit? Where have you seen growth and where have you seen less growth?
So, of course, over the last couple of years, we've seen a lot of growth within our FIC business, and a lot of that has been around client demand and needing to hedge through what has been a very challenging macroeconomic background. But, of course, in this rising interest rate environment, what we have started to see is our other businesses really start to contribute considerably, particularly our more stable businesses, such as the corporate bank and our private bank.
Do you worry about UK markets in general? We've seen quite a lot of leverage, but we haven't really seen an event, something go bust or go bankrupt because of this, you know, huge rise in interest rates that has happened in the last 12 months fairly quickly. Is that a surprise?
Yes. I don't think so, and certainly when we think about our credit loan loss provisions, even for 23, we think it's going to remain fairly consistent. So, of course, we continue to monitor, and there may be certain events which take place that are unforeseen. But given that we are anticipating that there's going to be a shallower and shorter recession here in the UK, we don't necessarily think that that's going to result in increased loan loss provisions.
So how's business looking like in the next 12 months in the UK?
It's looking pretty good, actually. I think we're very positive. You know, don't forget, we've come out of a 3-year strategic overhaul. So in terms of where we want to invest and where we're relevant to clients, I think we have the right business here in the UK to build on the progress that we've made over the last couple of years.
Is the government serious in trying to attract, you know, a bigger pool of capital, maybe from foreign investment, or even, I guess, loosen up regulations so that more companies want to list in the UK?
I think so. I mean, clearly this is a government that wants to listen to business and wants to listen to financial services. So the Edinburgh reforms, which were announced at the end of last year, I think is a step in the right direction. And we also have the Financial Services and Markets Bill, which is going through Parliament at this point. So from what we understand is, you know, they don't want to stop there. They're still looking for thoughts and ideas of where we continue to contribute to growth in the UK economy.
I was in Davos, where Labour actually did also a huge push to try and, you know, woo business, to try to seem more market friendly. Are you having those conversations with the opposition party as well?
I think that the opposition has clearly been sort of doing the rounds and really reaching out to business. So I think they're very much in listening mode at the moment, which I find very encouraging. So, you know, certainly I think over the next 18 months, I would expect that to continue.
What would you need from either government, really, to make your life, your business a bit better and a bit easier?
So for us, it's really about stability. And I think we've started to see that stability come to the market over the last 3 months. So I think that's really the most important thing. Whenever we're looking to invest, we're looking to invest in an environment that is consistent. We're making long-term decisions, and therefore having a government that one can rely on to make those decisions is clearly very helpful.
What's the most misunderstood thing about the UK? I mean, we had a number of conversations about regulation, about also bankers needing to move either to Europe or to New York. Do you think the City of London status will ever change significantly?
So I think the City of London has had a great history of reinventing itself again and again. So I think that will happen here. And clearly when it comes to organisations like the London Stock Exchange, they're also again reaching out to industry around what does it take to have listings here in the UK. But we are a global financial centre and we compete on a global basis. So we always need to look to London, to New York, to Frankfurt, to Asia, and particularly some of these emerging centres. We're moving into a multipolar world.
Are you seeing less bankers wanting to live here in London? Is it difficult to find the right people?
Not at all, no. I mean, that's one of the joys, I think, in being in London. It's still the pool of talent here is very deep and is considerable. So whilst we have large operations in Frankfurt and in other global centres, I think London will always be key.
We're kind of going around the world to try and understand, really. I mean, you seem quite optimistic, cautious, but optimistic about the future. When chief executives want to list in London or do a big investment in London, what's the one question that keeps on coming over and over? Is it political instability or is it something else?
No, I think the stability is something which is being delivered now, literally month by month, and I think that's something which now has been put to one side. I think, as always, it's around valuations. What is, particularly with regard to growth stocks, what does the FTSE 100 look like? Is it future-proofed for the next 5 or 10 years? But I think the London Stock Exchange is very focused on that as an initiative, and I'm very supportive of it.
Do you think valuations are quite good because of the shock we've seen, certainly to sterling in the last 6 months?
Well, certainly we've seen a devaluation of sterling, which has played through into valuations. But I think as well, we do need to take a look at really the sectors as a whole, where there's growth and where it's a little bit more challenged. But otherwise, I think that the UK stock market has actually performed very well over the last 3 to 6 months versus other indices.
What's the UK landscape looking like in terms of rivals or competitors? I don't know whether the fintech scene is still one of the hottest ones in the UK that you're looking at.
I think fintech is with us to stay. So for us, it's really about where we can seek to collaborate. So in other words, enhance our own processes, enhance our own IT systems by working with fintech companies in order to help Deutsche Bank be an organisation for the future. So for me, fintechs are not a threat, it's more an opportunity.
And this is, as we, I guess, mobile differently. Is the UK still an example of what you can do in the UK and then roll out in Europe, because we are on our mobile phones actually a lot more. We're used to transacting on mobile phones more than maybe other parts of Europe.
I think that's right, and quite often we have pilot schemes here in the UK that then we're able to roll out elsewhere, so long may that continue.
Tina, thank you so much for joining us today. That was Tina Lee, Chief Executive Officer for the UK and Ireland at Deutsche Bank. Now, we'll of course be covering all things UK every week on Thursdays at 9:30 a.m. in our half-an-hour special. Coming up, alliance reboot, Renault and Nissan agree on a landmark deal aimed at easing tensions between the two companies. We'll have more on that story next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The yen fell on a report. BOJ Deputy Governor Masayoshi Amemiya has been approached to become the central bank's next chief. The Nikkei says the government and the ruling coalition held discussions with Amemiya on succeeding Governor Haruhiko Kuroda, whose term does end in April. But the government has refuted that that report. Dell has become the latest tech company to announce massive job cuts. It will eliminate a little more than 6,600 jobs, about 5% of its global workforce. Dell is facing plummeting demand for personal computers. Now, Beijing has shifted from expressing regret to threatening retaliation after the US shot a high-tech Chinese balloon out of the sky. China said the device was a civilian climate research vehicle that unexpectedly drifted over US territory. Beijing has denounced what it calls Washington's clear overreaction in using force. Secretary of State Antony Blinken has postponed a scheduled trip to Beijing, calling the balloon an airspace violation. And Beyoncé is now the most decorated Grammy winner in the awards show history with 32 wins. It's after the singer won 4 awards, including for Best R&B Song. Now, that's thanks to her album Renaissance. But she missed out on the very top prize, losing out to Harry Styles, who walked away with the Album of the Year honour. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. I mean, once you're the queen, you're the queen. Queen bee, forever.
And you know what, Francine? I was having a look at some trivia history. Do you know what song and single she won another Grammy Award for on her own, not with Destiny's Child?
I mean, I could sing it, but no, I'd be too embarrassed to. Which one?
I think we should sing it together. All the single ladies, all the single ladies.
Oh, we're always still the favorite. I will spare all of our viewers and maybe not sing, but we could maybe have a little dance off camera. Leanne, always bringing it. Thank you so much. Now, Renault directors have agreed to a landmark deal to rebalance the car maker's 2-decade alliance with Nissan. The deal aimed at easing long-standing tensions between the two companies. Joining us now is Bloomberg's car czar, Craig Trudell. Craig, I kind of want to know what music they got on stage with, because this is a trick, right, that they do. I don't know if it's Beyonce or something else, but what's the latest on the structure, apart from their song choices?
Yeah, in terms of incremental developments today, I would say maybe the one that stands out for me is Mitsubishi Motors, which is the sort of third leg of the alliance, was added, sort of in the last couple of years of Carlos Ghosn leading this group, is going to at least take a look at investing in Ampere, which is the electric vehicle and software unit that Renault is going to sort of cleave off here. Beyond that, I mean, a lot of what was discussed today is really sort of confirmation of what's been known, some kind of fleshing out of what sort of projects they're going to work on. But these are companies that still are not necessarily, fully, addressing or putting to bed concerns about, the sort of long-term health of this alliance. They're saying they're going back to the beginning and back to basics in terms of working together, but the proof is going to be in the pudding in the years to come.
I mean, Craig, does this alliance still make sense? And is this, I mean, if this doesn't put them in a better footing, but I guess, resets the relationship, why do they still have it?
Yeah, I think there's definitely still some validity to having, joint platforms, joint purchasing agreements, some, validity to, pursuing that in the, pursuit of bringing costs down, and sharing, development, sharing production assets. But I do think, when you take a step back and take a look at what they're doing going forward, and this is perhaps, setting the stage for it being easier for these two to, if not break up, at least, go and work with other companies and have, the flexibility to pursue joint projects with other car makers rather than, solely focus on, what the two or, 2.5 could do.
The most difficult question you'll have to answer all year is what will make the success of a car company in the next 5 years? Is it the right software? Is it being an EV? Like, how do these two groups make it work?
Yeah, and I think Renault is really sort of going in the direction of trying to take this on with partners in the tech sector, notably with Google and with Qualcomm. And so, I think there are some questions that Nissan, perhaps, the onus is on them to answer going forward. What is their plan to sort of, come to market with what Tesla has done, not just electric vehicles, but connected electric vehicles that can be updated over the air. I think one of the things that's sort of underappreciated about what Tesla has done to sort of disrupt the industry are some of these things, that are sort of more tech-like. And a lot of the incumbent car makers have talked a big game about replicating that. and not been able to really execute that.
Craig, thanks so much, as always, for the terrific roundup. Our Bloomberg Kartzar, Craig Trudeau. Now, Bloomberg's Tom McKenzie will also be speaking to the chief executives of both Renault and Nissan in a joint interview. That's at 10:15 a.m. London time. Stay with us for that. Also coming up, we get the latest on the powerful earthquake that has killed hundreds on the Turkey-Syria border. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, hundreds of people have been killed in an earthquake that hit along the border between Turkey and Syria. You're looking at live pictures from the Turkish city of Diyarbakir, where rescue efforts are underway. Onur Ant, Bloomberg's Turkey bureau chief, joins us now. So, Onur, what are the latest updates on some of these rescue efforts?
Well, it's a race against the time for rescue operations underway currently in Turkish cities along the border with Syria, where a powerful earthquake struck at 4 a.m. this morning. The temperatures are close to freezing, and we expect the rain to turn into snow in some of the affected areas over the next few days. More than 1,700 buildings collapsed on the Turkish side of the border, according to Turkish authorities, trapping hundreds, if not thousands of people. And death toll right now stands just below 300, but very likely we're going to see some dramatic revisions in that figure in the coming hours.
So, Onur, why have oil flows to a Mediterranean port been halted?
That Mediterranean port, Ceyhan, is very close to the area affected by the earthquake. And although authorities say there were no leaks or other damages detected on the pipelines carrying crude oil from Azerbaijan and Iraq to the Ceyhan oil terminal, they have still halted flows as a precaution. It's not clear when they're going to resume, but according to Turkish authorities, there's no damage to the pipelines.
So how prone, Onur, is the area to earthquakes?
Turkey as a whole is one of the most active seismic zones. So a major earthquake takes place every few years, if not more often. This area in particular, also we've seen major earthquakes in eastern Turkey and southern Turkey in the last few years. Over the last decade, there was another major one in Van, which is not that far away from the area affected in this case. So yeah, Turkey does sit in a very active seismic zone. But to be clear, these, according to some of the geologists that we spoke with, this is definitely the most powerful earthquake that took place since 1999 in Turkey, and possibly the biggest, the most powerful one since 1939. Yeah, possibly the biggest earthquake that shook Turkey in close to a century.
Yeah, and Onur, of course, some of these headlines are just heartbreaking. Thousands, we understand, are still injured and trapped as a lot of the buildings are, if not collapsed, on the brink of collapse. We have 284 deaths in Turkey, 237 in Syria, with, of course, destruction concentrated in border areas that house millions of refugees. What international effort can we expect and look at? Which country has offered to step in?
US, Israel, Iran, Azerbaijan and India, as well as the European Union, have all offered to help, and I think Turkey is open to receiving those assistance offers, because the Interior Minister earlier today, he said that Turkey has activated level 4 alert, which basically means that Turkey is open to and does want to have international assistance, because the situation in the southeast, judging by the footage and the reports, seems to be quite dire.
Onur, thank you so much. Onur Ant there, of course, with the very latest on the ground. One of the most powerful earthquakes to hit the Middle East in years has killed hundreds of people in Syria and Turkey and forcing a halt to crude oil flows to a key export terminal. So we'll continue watching this developing story very closely. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz in New York, Anna Edwards here in London, and this is Bloomberg.
Any country that has its airspace violated in this way, I think, would respond similarly. And I can only imagine what the reaction would be in China if they were on the other end.
This is an unexpected incident caused by the force majeure. Despite China's explanation, U.S. use of force is overreaction.
This balloon incident was a gross violation of U.S. sovereignty. The Biden administration really just wants to prevent the relationship from deteriorating into outright confrontation or even conflict.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Divers try to recover what could be spy equipment from the Chinese balloon that was shot down. Lawmakers demand to know if any of the technology came from the United States. The yen falls after a report on a possible replacement for the head of the Bank of Japan. Deputy Governor Masayoshi Amamiya has played a key role in the central bank's large-scale stimulus program. Renault and Nissan have reached a landmark agreement on reshaping their alliance. We will talk to the CEOs of both automakers later this hour. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, clearly after the jobs report on Friday, markets were very risk-off in their response to that, concern around higher interest rates, and now continuing to be risk-off, but with added geopolitical dimensions.
Yeah, that's absolutely right, Anna. And you definitely saw both things reflected in the Asian session overnight, where most stock benchmarks were indeed lower. The MSCI Asia Pacific Index falling by more than 1%, actually 1.6%. And those really were losses led by China and Hong Kong stocks in the wake of the U.S. shooting down that reported spy balloon over the weekend. The Hang Seng China Enterprises Index in Hong Kong down by about 2.7%. So geopolitical tensions coming to the forefront after, frankly, investors had been betting on more smoothed out relations between the world's two largest economies. Another story watching in Asia overnight, and Anna mentioned this, potentially Masayoshi Amamiya coming in to replace Kuroda when his term is over in April at the Bank of Japan. Now, the Japanese government has pushed back against those reports that happened over the weekend, but that is not stopping market participants from betting perhaps or reacting to the idea that that could mean continued easy policy in Japan. So we're seeing that reflected in a weaker Japanese yen today, dollar yen trading just shy of 132, 131.97 at the moment. Then, of course, the other story we continue to watch in Asia is the saga and collapse of the share prices in the different Adani conglomerate groups. Of course, you had the flagship Adani Enterprises now pulling back a bond sale over the weekend. Now Adani and some of his family members are prepaying $1.1 billion against some borrowing. It doesn't really seem to be helping any of the share prices, though. The Enterprises flagship only down about 0.9% on the day, but you're seeing much deeper losses across some of the other stocks in the conglomerate. Matt, it's safe to say this saga is far from over.
Yes, there's a lot going on with the Japanese central bank, with the Adani story that continues, the balloon, can't forget the balloon, obviously, and then the jobs number on Friday, really roiling markets because it was so much more than had been expected. And Jerome Powell was trying to tighten financial conditions, which seem really loose now. Take a look at S&P futures, down about 0.9%, even after we dropped 1% in the cash trade on Friday. So it looks like we're going to see further declines in risk assets this morning. You see the U.S. 10-year yield continuing to climb right now at about 359. Remember, we shot up 13 basis points to 352 and change on Friday. So that climb continues as investors sell off this debt. Why hold debt today if you think the central bank's going to raise rates tomorrow and you can get a better return? The dollar index continues to climb as well. Right now, the Bloomberg dollar index at 1238. And what's interesting is that drives down assets priced in dollars. So you see gold, for example, it was up over 1950, and now it's down with an 18 handle. Oil is the same. We saw WTI climbing up at one point early last week above $80, and now we see a 73 handle there, 73.32. Anna, what do you see in Europe?
Yeah, well, here in Europe, Matt, we see red across the board, essentially. So negativity across European equity markets. And what's interesting is, despite that strength in the jobs report on Friday and the selling pressure we then saw on risk assets during Friday's session in the U.S., European markets actually managed to close in bull market territory. So going back into a bull market on the Stock 600, some of the individual markets were already in that territory. But that was the overriding theme of Friday for European stocks. So maybe some of that strength was overdone. And so we're looking a little bit more vulnerable this morning and giving up some of those gains in the face of the geopolitics and more thinking perhaps around the Fed. I also wanted to bring you what's happening in Turkey. Clearly, the humanitarian story is front and foremost. We will get a further update on what is happening on the ground with the rescue efforts later on in the programme. But I just wanted to show you how this is playing out from a market perspective. That earthquake hitting Turkey, and we see evidence that there's more selling of Turkish stocks. As a result, we see the CDS going higher, yields going higher, the cost of insuring against default on Turkish debt has gone higher. As a result, 8 stocks suspended and a ban on short selling as the market tries to ascertain exactly what has happened to the operations of certain businesses. This is another market in focus. The FTSE 100 down by 0.9%. And I mentioned the bull market story, Matt, from Friday. Well, this was interesting. The FTSE closing at a record high during Friday's session. So it's kind of striking a bit of a different tone. Doesn't quite chime with what we were seeing stateside. And so European stocks coming down today as a result. 107.66. Just thought worth checking in on euro dollar. We've been up to 110 last week in anticipation of some of that data coming out of the United States and all that hawkish talk from the ECB. Well, some of that vulnerable now. We've seen the dollar, of course, gaining as a result of the non-farm payrolls report, and the euro continues to fall, down 0.3%. Here's the UK 2-year yield. A reminder, perhaps, of the tightening still required in the UK economy. Then we heard from Catherine Mann at the Bank of England talking about that theme a little bit earlier on, and that has been lifting yields at the certainly at the front end.
All right, so the FTSE coming off a record high close on Friday. Meanwhile, back in the U.S., lawmakers are demanding to know if that Chinese balloon was carrying technology from America or its allies. Divers are trying to salvage what the government believes is spy equipment from the balloon, which was shot down off the coast of South Carolina after President Biden's order.
On Wednesday, when I was briefed on the balloon, I ordered the Pentagon to shoot it down on Wednesday as soon as possible. They decided, without doing damage to anyone on the ground, they decided that the best time to do that was as it got over water outside within the 12-mile limit. They successfully took it down.
For more, we're joined by Bill Ferries, Bloomberg's senior editor for Asia and former U.S. national security team leader in Washington, D.C. So, Bill, what are the implications of this balloon incident on Blinken's trip to China? Are we going to see the possible détente derailed by a balloon?
It's certainly possible, Matt. We don't know yet when Secretary Blinken plans to reschedule his visit to Beijing, but everything we've seen over the last few days, this incident is likely to have him arrive in Beijing with a little bit of a harsher tone. There were never huge expectations for major breakthroughs in this meeting, but it had been hoped by both sides that Secretary Blinken being in Beijing would be a restart of more mid-level and lower-level talks that could really help deal with some of the big problems in U.S.-China relations.
And what are the next things we're looking for then as this crisis continues? The market increasingly focused, it seems, on the geopolitical risks attached to this.
Well, it's going to be very interesting to see what these Navy divers off South Carolina are able to bring up and what the U.S. is able to determine from the debris that it collects. There's going to be a lot of questions about which Chinese companies may have manufactured this equipment and whether they're already under sanctions or could possibly be under new sanctions. There's going to be a lot of interest, as you mentioned, in whether U.S. or allied technology was involved in this equipment and whether there's a way to tighten the screws on that. And separately from the Chinese side, they've said that they will look for ways to retaliate, so that could make tensions a little bit higher in places like the South China Sea and the Indo-Pacific broadly, where the U.S. continues to operate.
All right, Bloomberg's Bill Ferries reporting from Singapore. Thank you so much. A story we will continue to follow and have more on later on this hour. Meanwhile, elsewhere in Asia, the yen is falling on a report that BOJ Deputy Governor Masayoshi Amamiya has been approached to become the central bank's next chief. Joining us now for the details is Christine Aquino, Bloomberg Managing Editor for Markets. So, Christine, Amamiya is seen as a continuity candidate for the BOJ governor. So why don't yen traders seem to like the idea very much?
Yeah, good question, Kailey. I mean, typically markets do like the idea of continuity, especially at the central bank. But for the Bank of Japan in particular, we have seen Governor Kuroda's legacy as being very, very conservative when it comes to pulling away from that super low rate, very easy monetary policy era and back to something that's more normal. And that's really what markets have challenged the BOJ to do over the last 6 months or so, is to kind of join that policy normalization train. Now, with EMEA potentially being tapped for the next governor role, that's probably going to continue that more conservative approach, and markets really don't like to see that at this stage.
Right, indeed. And good morning to you, Christine. What would be considered a game changer then for markets when it comes to the next BOJ governor? I guess if this is a continuity candidate, then somebody who is not that.
Exactly, Anna. I think somebody who comes in and really rips up the playbook of the BOJ so far and kind of radicalizes the way that they approach policy. Certainly somebody who would be considerably more hawkish than Governor Kuroda and potentially Deputy Governor EMEA. We do have a few of those on the Bank of Japan Policy Committee. So there have been a few individuals identified as part of the committee who would be considerably more hawkish, considerably more eager to start and speed up that policy normalization process.
All right, Bloomberg's Christina Aquino, thank you so much. Now turning to Carlyle, it has a new CEO. Bloomberg has learned the private equity giant has chosen former Goldman Sachs co-president Harvey Schwartz. The announcement formally could come as soon as today. For more, we're joined by Sonali Basak, Bloomberg Global Finance Correspondent. So, Sonali, we've been waiting for a choice for a while. Is Schwartz a surprising one?
Listen, this is a dramatic end to a really stunning 6-month search on Wall Street. Remember, we know Harvey Schwartz left Goldman Sachs. He was a CEO contender back in 2018. And so now, yes, I mean, it's pretty rare, guys, to see a banking executive take over a top spot at one of the largest private asset firms in the world. That transition is challenging to make. Remember, he himself, again, was the president of Goldman Sachs, so he has a very material leadership experience here at a time that is very challenging for Carlyle ahead. Carlyle's own directors have said that the firm could benefit, according to sources. The firm could benefit from an outsider with a fresh perspective. But again, this is another shot at the game here for Carlyle, which already tried to transition past the founders, which still hold 25% of the firm's stock.
So succession has been an issue for a lot of these old, storied private equity firms. What are the other challenges that Carlyle faces?
Listen, their stock has really lagged their rivals. So between asset growth and between kind of bringing around the firm's performance here in public markets, changing the perception of Carlyle after such a dramatic debacle we saw at the top will be an interesting thing for Harvey Schwartz to be doing. Remember also the fundraising environment at large has been very challenging, and Carlyle itself has been lagging where it wanted to be in certain fundraising metrics. What I had understood also is as they go out fundraising, there's the core private equity groups where the cost of financing is higher now than it was in the last decade or so, and they've been pivoting more towards credit as well. So can they improve morale while also kind of sharing the love among all the businesses in a tough fundraising cycle?
All right, Sonali Basak joining us early on a Monday morning here in New York. Thank you so much. Now, another story we are watching this morning is Dell. The company announcing plans to cut about 6,650 jobs, or roughly 5% of its global workforce, as it faces plummeting demand for personal computers. It, of course, joins a long list of technology companies announcing they will be letting go of thousands of employees amid a soft economic environment. As for how the stock is reacting in pre-market trading this morning, it is not too large a move, but it also is not a positive one, which is kind of a break from what we have been seeing, the pattern we have been seeing when companies announce mass layoffs. Usually there is a positive stock reaction, not so for Dell this morning. That stock down about 0.8% before the bell. One stock on the rise, though, is Tesla. And get this, it's about a price hike. Of course, the news we have been following with Tesla for some time now has been that they are reducing prices of their models in order to spur demand. But over the weekend, they raised the price of their Model Y SUV by as much as $1,500, depending on what package you get. Tesla's up about 1.1%. This might be tied to the Biden administration expanding the eligibility for those EV tax credits for cars up to $80,000. But that is stock to watch today. And finally, it is a Monday and potentially some M&A Monday, or at least proposed M&A. Newmont Mining Of course, the gold giant here in the U.S. making a $17 billion bid for the Australian company Newcrest Mining. We'll see if that deal ultimately goes through. If it does, it could be the biggest deal of the year thus far. But investors in Newmont not reacting kindly to that news. Maybe they don't like that price tag, Anna. That stock down about 5% before the bell.
Yeah, the attractions of gold and copper, what are they worth? Kailey with the pre-market movers. Coming up on this programme, we will speak with the CEOs of Renault and Nissan about the reshaping of their alliance. The two businesses agreeing on a landmark deal just this morning to reshape that alliance. That conversation coming up next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Anna Edwards in London. Now, Nissan and Renault have agreed on a landmark deal to reshape their alliance. Renault will cut its holdings in Nissan from 43% to 15%. Meanwhile, Nissan will invest in Renault's electric vehicle business. Joining us now with the CEOs of both Renault and Nissan is Bloomberg's Tom McKenzie in London. Tom?
Matt, thank you very much indeed. Yeah, a major day, of course, for both of these corporations, all three companies within this alliance. Very pleased to say that I am joined by Luca De Meo, who's the CEO of Renault, and of course Makoto Uchinda-san, who is the CEO of Nissan after this announcement. Historic as the way that it's been described at the press conference. Luca De Meo, let me start with you. You've talked about, we heard in the press conference there, executives from both Nissan and Renault saying, look, this is a new start for the alliance. It's going to inject new momentum. The question, of course, for many will be, the ties have been weakened as a result of the capital changes, the shareholding changes. Is that a contradiction? Explain for us how this reboots the alliance and how you look through that contradiction, at least as it seems to some.
Look, I think that we took the problem from the other side, right? So a lot of discussion has been going on in the last years about the governance, but in fact, we took the problem with Uchida-san from the basic operation and the potential of business that lies in the cooperation, so from the bottom. And so I think that this new deal is based on business opportunities. That's one thing, and simple, clear rule. As a consequence of the whole thing, not as an objective of the whole discussion, was the idea of going back to a normal governance scheme between two companies having cross-shareholding participation, because we had I would say a very baroque way of handling the governance issue with a company like Nissan having 15% of Renault without having any right, and we on the other side having 43.4% of Nissan having no right. So right now it's 15-15. I mean, it's going to be like this in the next. We're going to prepare that, and that's the destination. But we will be eye on eye, and it will be just a simple, normal governance scheme. So I think it will help also the operation and the conversation.
Okay, Mr. Uchida, I'll bring you in at this point. The marriage analogy has been made around this alliance. It was made again today. Some analysts, some investors saying, look, this could be a renewal of vows between the two companies, or it could be the first step towards a divorce. What is your response to that?
No, as Luca mentioned, let me add some of the comment, because if you look at our business circumstances today, right, world market is in a fragmentation, and we need to make our value proposition to be demonstrated in each market. So how we can make our alliance to be a next stage was the first discussion I had with Luca back in May, if I'm not mistaken. And we have been sharing how we can make our value of each company to be present. And of course, Luca has his own Renaulution as a Renault strategy, and therefore he's going for the Ampere. And we, as a Nissan, also have our own strategy. And how we can maximize all those together was the initial discussion. So what I would like to say is we should not be staying at the past way for our future growth. And that's not where the automotive industry is working right now. So this has matched. And I think these circumstances made us to move on that way, and how we can make more collaboration to be much better. So it's going to be more stronger is my message that I can give.
Okay, and look, to those who say, look, Renault and the French state, frankly, have given away too much in this deal. How do you reply to that?
No, I think that we got the support of also the French state, which is one of our major shareholders, because they understood that we had to move on. And so in fact, the previous governance that was decided in a way had an impact on the operation. So I'm the CEO, so I look at the business. I look at the business opportunity. So we have been fighting to propose something where everybody could see, any stakeholder could see, that the future would be better than the last 3 or 4 years or 5 years, based on the project that we have agreed to get. Now, of course, we have to execute them one after the other. But they are not rocket science. Sometimes they are, it's a deal on the market, it's a deal on the technology, on the platform. But what we have announced today in terms of business project and opportunity is much bigger than what we have ever done, at least in the last 10 years, from a pure business value creation point of view. And that's the most important thing. I mean, then they can say whatever they want, but we are here to develop the business and create value for our shareholders and stakeholders.
And an important part of the shareholder structure change is, of course, putting that 28%, Renault's 28% stake, part of that stake, 28%, into a trust. Mr. Uchinda, do you buy those shares back? What prism, what are you looking at in terms of your determination, in terms of when you buy those shares back, over what time frame?
Again, I really would like to emphasize again, we're going to make an equal partnership in order for us to grow together. That comes the first priority. Then, of course, our partner has their economical rights through this trustee. And, of course, my job is how I can make my Nissan share price at the right level in order for my partner to be satisfied, right? So the entire thing has been discussed on that manner.
Okay, and in terms, let me follow up in terms of your investment in Ampere, which is the electric vehicle unit of Renault, which we've heard you may want to list later this year, and maybe I'll get to a question on that. How much do you want to be investing in Ampere? Up to 15%. Where does that take you? What do you need to be looking at to make that determination as to how much you invest in Renault's EV unit?
Yeah, first I really would like to see how the Luca is going to make this Ampere to be more attractive for me, all right? So
I will.
Yeah, you will, he will. And we say that I'm going to be a strategic partner, as we are today with the partner. So when he wants to do the new business in, let's say, in Europe, we can get a lot of opportunities through his new era of Renault transforming more further on this Ampere business, that there's a lot of opportunity that we can build. So we are saying that up to 15% as an initial we're talking about here. And of course, he would demonstrate me a lot to make it more attractive.
Okay, there have been concerns. Non-executive directors at Nissan concerned about intellectual property and whether some of that leaks to Geely, which is going to be a partner for Renault going forward. How did you address those concerns around intellectual property?
Well, intellectual property for the both company, is very valuable for us, okay? Then we do have a lot of co-owned intellectual property that we have been making together for the past 23 years. And of course, there's a different transformation of the company structure that he is doing for his powertrain. Then we have to go through every single items to make it fair for the both company. As simple as that for me.
Luca De Meo, let's bring you in at this point in terms of execution, because it's what, a year since I think you announced how you're going to be restructuring the Renault business. And then, of course, we've got to a point now we've signed off on this deal around the alliance. There'll be those who look back at the past and say it took too long to execute. And maybe you'll agree with that. Does this allow you to execute more quickly? Are the lags, the delays, the indecision of the past, has that been put to bed now?
I think I'm in Renault since July 2020. I think we executed one of the most, let's say, brutal and effective restructuring project in the automotive industry in the last couple of decades. You just look at the numbers. We are parallelly developed probably the most attractive lineup of products that will come from now to 2025 for all the brands. We have presented a strategy for up to 2030 with the Revolution and Revolution phase. So all the things that we're discussing, Ampere, Horse, Alpine, Future is Neutral, etc. So I don't think we've been sleeping at all or been slow into that. Actually, I think there is a very, very strong dynamic at Renault. We started with Uchinda-san in May to discuss about how to revamp the alliance. For me, my main stream or my focus is obviously the strategy, execution of the strategy of Renault, and I look at the alliance as an opportunity. Now I can clearly see it because we have very, very concrete projects, and I don't think we have been, let's say, so slow because this thing has been locked for 4 or 5 years, and in a matter of 6-8 months we actually find the key, I think, and the solution.
Okay, very briefly before we let you go, Mr. Uchinda, do you see demand? How much more demand do you see coming back as those supply chain constraints ease?
Supply constraint is?
Yeah. How much demand is coming back as a result of that?
Well, I would say that, of course, we really need to carefully to monitor on this coming fiscal year of 2023, because I always say that word now is become very difficult and challenging. Who ever thought about it if you're 1 year ago, right? What has been happening only this 1 year? So we need to be anticipated, we need to be prepared, and hope how we can make our value of the company to be in the base of
We're running up against a hard break, so I have to leave it here. The CEOs of Renault and Nissan, thank you both very much. Stay with us for more. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Divers trying to recover what could be spy equipment from the Chinese balloon that was shot down. Lawmakers demand to know if any of the technology came from the United States. The yen falls after a report on a possible replacement for the head of the Bank of Japan. Deputy Governor Masayoshi Amamiya has played a key role in the central bank's large-scale stimulus program. And Carlyle Group moves to resolve its long-running succession challenge. Bloomberg's learned the private equity giant has chosen former Goldman Sachs executive Harvey Schwartz to be its CEO. Welcome back to the programme. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, we continue to watch NASDAQ futures weakening, US futures more broadly weakening. There's the aftermath of Friday's jobs report. There's geopolitical tension. There's also rising short-end rates on treasuries and here in the UK.
Yeah, it does seem to be, well, really about Friday's jobs reports and continued concerns that the Fed is not done hiking. As a result, we saw the cash trade drop 1% on Friday, and now we're looking at futures that are down about 0.9%. You can also see that yields are rising. So the 10-year yield, which had already risen 13 basis points on Friday to 352, is now up to about 361, gaining another 8 basis points today. So that's a very interesting factor. And combined with the strength in the U.S. dollar, that causes more risk-off movement in markets. Right now, 1238 is level on the Bloomberg Dollar Index. But as the dollar rises, the price of assets priced in dollars falls. So, for example, gold was up over 1950. Now it's down at about 1850. And NYMEX crude was up above $80 at one point last week. Now West Texas Intermediate is down to 73.71. I should say it's up from the close of the last session, but I'm just pointing out that as the dollar rises, a lot of these assets, including Bitcoin, are lowered in price. Bitcoin now down under $23,000. Kailey, what are you looking at in terms of pre-market movers?
Well, potential merger Monday action, or at least proposed merger Monday action in the gold space. Newmont Mining making a $17 billion bid for the Australian company Newcrest. Investors, though, not reacting too kindly to that offer. That stock, Newmont stock, down nearly 6% before the bell. I want to point out Tesla, too, because we actually, after a series of price cuts, have seen a price hike over the weekend for its Model Y SUV that may or may not have something to do with the Biden administration tweaking the eligibility for EV tax credits. But nonetheless, Tesla is up about 0.8% before the bell, but that's a relative outlier within the big tech space. Anna, you mentioned, and Matt talking about the deterioration we were seeing in NASDAQ futures that really is led by the mega caps. Apple giving back its gains of last week to some extent, that stock down about 1.2%, and then Amazon extending losses after an 8% decline on Friday after its poorly received results, down another 1.3% before the bell on this Monday morning, Anna.
Yeah, it was interesting how on Friday we saw US markets pass those tech stocks quite differently, actually, resulting in different share price performance. This is the share price performance we see here in Europe today. So coming off a bull market, being in bull market territory on the Stock 600 on Friday, looking a little bit vulnerable then with that jobs report and the geopolitical tensions that hang over the market, and stocks in Europe down by just over 1%. Away from the broad picture, away from the macro and the geopolitics, we also had that earthquake in Turkey. Our focus clearly on the humanitarian side of things there, the death toll and the rescue efforts underway. We'll get an update on that shortly, but thinking about the market impact here, we're down by 2.7% on the Turkish equity markets. We've seen certain stocks suspended as investors look to get an assessment of what kind of impact this has had on operations. We've also seen a ban on short selling. We see CDS rising. It's becoming increasingly expensive to hedge, to protect yourself against the risks of default on Turkish debt. So those things are all on our radar, if you like, on that subject. The FTSE 100 down by 0.9%. And actually on the FTSE during Friday's session, Matt, we ended at an all-time high, the first one we've seen since 2018. And so that being seen as quite interesting for those very focused on the UK market, even if a lot of that was driven by weakness in the pound, strength strength in the dollar post the jobs report. This is the UK 2-year yield then. Matt was talking about the front end of the Treasuries curve, or at least when he had the 10-year there, and we were also referencing movement at the short end. Here we have the short end of the UK curve, reacting really to global fallout from the global geopolitics, but also reacting to comments from Catherine Mann at the Bank of England, which could be seen fairly hawkishly. And as a result, we're seeing a move of 14 basis points at the UK short end.
Yeah, it does seem to me that central bank talk about rates, especially after the jobs number that we got on Friday, is going to drive the front end, possibly more than the balloon. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. Seema, what's your take on the rise that Anna points out there in front-end yields? Are we expecting central banks to get more hawkish after this jobs number?
Look, I think it's a difficult one at the moment to weigh up. You know, you look at a lot of the economic data and it has been suggesting that there's a slowdown coming. And then you get, of course, this blowout number from Friday on jobs. And I think it is making a lot of people question and say, you know, maybe the US economy actually is that much more resilient. And then, of course, on the other side, there's what we think the Fed is going to do. I mean, from our perspective, we do think that the Fed has got fairly further to go, so another 50 basis points to go at least. And then we're not anticipating rate cuts for this year because we do think that the US economy is fairly resilient, but so therefore it needs further work from the Fed to keep policy restrictive. And then at that point, of course, we'll see how things pan out.
Seema, good morning to you. So you expect another 50, no cuts then from the Fed this year. We heard from Larry Summers over the weekend. He was talking about how the chances of a soft landing have, in his view, been increasing in the last few months or so. Is that something that looms on your radar? I mean, some sort of environment where we can effectively bring inflation down some, but at the same time not damage unemployment too much, or is that just too Goldilocks to wish for?
Well, it is really interesting because I think Larry Summers has been the leading voice through all of this. You know, he was one of the first ones to call out that inflation was going to move significantly higher and then the Fed would have to move more aggressively. So with him saying that the soft landing maybe is becoming a little bit more realistic, you have to take notice and sit up and listen. So from our perspective, we are expecting recession to hit in the second half of the year. We're expecting to be fairly modest, so 2 or 3 quarters fairly standard for a US recession. But the data is coming in stronger. So, you know, I think what we are likely to see is a US economy which doesn't necessarily feel like it's a recession.
Yeah, recessions with unemployment rates at 50-year lows. Difficult to picture here or here in the UK as well, or in the United States, more specifically on that data.
I think particularly on the US, you know, for the UK, we are a lot more bearish in terms of the economic outlook. We do feel actually you will start to feel like there is a bit of pain because we have got a couple of other dynamics which are playing through. But specifically for the US, the soft landing, it is, I think the percentage chance of it happening, it has increased, certainly. But for us, when you look at all of the economic models, especially the yield curve, it's very difficult to dismiss a lot of those factors and say that a soft landing is possible.
Well, and let's talk about what kind of landing is priced in, Seema. Good morning, good to see you. David Kostin over at Goldman Sachs publishing this morning saying that already the S&P 500 accurately reflects signs of better than expected economic growth and a drop in bond yields. Therefore, they don't see upside from here. 4,000 is now their 3-month target and their year-end target, and even that is below where we are now. How much room to run is there for the U.S. equity market?
And I think David's made a really strong point here, which is that in terms of what the market is pricing in, it's very difficult to get any better than that scenario. They have got the Goldilocks scenario priced in. So from here on, especially when you start to think about geopolitical tensions that we've seen over the weekend, there is no room for error. So I think from here, we're probably getting closer to the top point, but we need to start to see those earnings disappoint a little bit more. So it might be a couple more weeks or even next earnings season before we see that movement.
Well, Seema, I'm glad you brought up geopolitical tensions because there's a question of that risk as it relates to U.S. stocks, but Chinese equities as well, considering how much it has powered a rally within that domestic market and in broader EM thus far. A lot of optimism about not just reopening, but also potentially the easing of relations between those two countries. If that goes away, if things become more tense, what does that investment thesis change look like?
Yeah, so I think we've had a slightly more cautious perspective when it comes to China. So we do believe that the next 6 months we'll see this fairly meaningful boost to growth and, of course, a lot of investor optimism. But then you get past the next 6 months and you have to start to think, well, look, the regulatory side, the common prosperity goals, none of that is going to go away. We know that the government is not necessarily going to push for a major move up in China's economic growth. And as you said, then there's geopolitical tensions. So if that doesn't ease, then it does mean that it should constrain China's growth going forward. So a lot of the industries that there is a lot of optimism around would be very negatively affected if these tensions continue to escalate. So for us, that is a bit of a tension point. 6 months out, good. Beyond the next 6 months, I think we have to be a little bit more concerned.
Seema, India has been really the hot alternative to China for investors at the end of last year, beginning of this year. Does the Adani case derail that? Does it complicate India as an investment?
Yeah, India, as you said, look, it's been a fantastic outperformer. Now, the thing with India is, the Adani case, it's difficult to figure out whether, if it's going to have longer tentacles or not. But the one thing that we do know is that if you look across the global universe, India and the US are the two most expensive markets. So from that regard, India really can't afford to have any kind of upsets like the Adani case. So we do think that maybe it is going to unsettle investor perspectives for India and maybe settle it down, especially when you consider that outside of India, in large parts of emerging Asia, there are some really, really good opportunities. So this may dim the attractiveness of the India story.
And a lot of those emerging market opportunities might hinge on the dollar, and a lot at stake for the dollar. Last week, we saw that clearly demonstrated, a big rally in the dollar as a result of that outperformance on non-farm payrolls. Where do you think the dollar heads then from here, Seema?
So we have been of the mindset that this year is going to be a weaker for the dollar. But I have to say, as long as the US economy is as strong as it is, and as long as the market is questioning how far the Fed is going to go, you are going to see these intermittent moves where the dollar will strengthen. So you don't get that kind of continued weakening. Now, once you get to the Fed pause, now at that point, then I think you could expect to see a dollar continuing to come down. But so much depends on the geopolitical shock nature. So, we think, broadly speaking, you're looking at a weaker dollar, which should help the rest of the world. But for now, it's a little bit up in the air.
OK, thank you very much for that, Seema Shah of Principal Assets Management. Let's step away from the market stories for a moment and bring you the latest on Turkey and the earthquake situation in Turkey. Turkey reporting a 7.5 magnitude quake in one province. This is a hit by this is a second high magnitude earthquake. This following the 7.7 magnitude earthquake that hit Turkey in the last 48 hours or so. There are many people talking about this having been the worst quake to hit the country since possibly 1939. We remember the late 1990s, the quake then killing 18,000 people. In 2011, a prominent earthquake as well. Sadly, a country very familiar with this kind of thing. We will certainly bring you an update on the latest here shortly. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with Occidental Petroleum CEO Vicki Hollub. That's at 10:30 a.m. in New York, 3:30 p.m. in London. This is Bloomberg.
We should stress that this is an unexpected incident caused by the force majeure, and the U.S. Department of Defense also said it will not present any military or physical threats to people on the ground. Despite China's explanation, the U.S. use of force is overreaction.
A spokesman there from China's foreign ministry criticizing the U.S. for shooting down a Chinese balloon off the South Carolina coast on Saturday. The U.S. has sent divers to salvage what the government believes is spy equipment from the balloon. It's expected to be hauled up in the coming days. Joining us now is Diana Choileva, chief economist at Enodo Economics, a research firm focused on China. So, Diana, this is all very interesting, right? Why send a balloon instead of a satellite? What kind of technology is on there? Who makes that technology? Do we have balloons as well, et cetera, and so forth? I wonder, though, simply why China would send a spy balloon that's so clearly visible as they're trying to, it seems, repair relations with the U.S. What's your take?
It's highly likely actually a mistake. Look, balloons are one of the oldest forms of surveillance devices, but they have been increasingly coming into use in recent years because they can fly at high altitude. They can hover over a long period of time, which a satellite cannot do. They're untrackable. The problem was that, unfortunately, this one got tracked. And I don't think this was a signal that China was trying to send to the US. It also is highly unlikely that the PLA was doing something that Xi Jinping wouldn't have approved of, as was the case a while back when we had such an incident with a test flight of a stealth fighter, which the president then, Hu Jintao, had no knowledge actually that test flight was going on just as the US Secretary of Defense was visiting. This time, this is unlikely to be the case. It's much more likely a mistake. But whatever sensors this balloon was carrying, one thing it did manage to measure is the temperature in Washington when it comes to its attitude and relations with China.
Well, and maybe that's why they sent it up there in the first place. You know, a few people have been comparing this to the U-2 Institute in the 1960s when we sent a surveillance plane over the Soviet Union, and that was shot down. It led to a worsening Cold War, the building of the Berlin Wall, and is it likely that this goes in that direction? What are your expectations in terms of the results?
The US response was proportionate, unlike the Chinese claim. And you can imagine what the outcry would have been in China if that was a US surveillance balloon being discovered. And actually, it was a well-done operation in terms of shooting it down over the sea. In that sense, probably also the US gathered itself valuable intelligence information. China was, though, aiming to appease the US. It doesn't quite fit with what they were trying to do, that this was a deliberate act. Look, everyone spies on everyone. You're just trying not to get caught. Unfortunately now, it's very difficult to see how they can row back from this.
Well, to that point, Diana, whether or not it was a mistake or intentional, the optics are really bad. So how does Beijing repair this damage?
Absolutely. And it's very difficult to see how it would repair this damage because, of course, in the US, we are now heating up and in the run-up to the US presidential elections. And it's clear that there is a bipartisan hard attitude towards China, but it's likely to get harder as we progress forward. So what can China do to really change perceptions? It's very difficult to imagine. So I think this hope for a detente, for a lowering down of the temperature in terms of the deterioration of the Sino-US relationship really doesn't have any future.
We saw a briefing, the usual daily briefing we get from the Foreign Ministry in China, Diana, a little bit earlier on, and they were emphasizing, on the one hand, the right to retaliate that China believes it would have after this episode, but also reiterating what they say is the accidental one-off nature of this balloon straying into US airspace. How will this play out domestically in China? It was interesting in itself that this was reported extensively, was allowed to be reported in China.
Well, in China, it makes sense for such an incident to be reported in the sense that it sort of maintains across the domestic population that China is standing its ground. In fact, China has created a double-edged sword for itself, or I mean, the Communist Party has created a double-edged sword for itself by stoking nationalist sentiment over the last 20 years. So often when incidents like this happen, they're pushed even further by the population. So, for example, when Nancy Pelosi visited Taiwan, China actually responded very strongly, but the Chinese population still pushed back on Weibo, saying that the response was too weak. So it's then how China manages the optics at home in terms of its response to this incident and the US shooting down the balloon.
Diana, thank you very much. Always good to speak to you with your expertise on China. Diana Choi-Leva of Enodo Economics. Coming up on Balance of Power a little bit later on, we'll pick up this theme. Former US Secretary of Defense William Cohen joins the team. That's at 12 p.m. in New York, 5 p.m. in London. We will be getting you an update on the latest from Turkey shortly. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Some of the most powerful earthquakes in decades have hit the Middle East today, Monday, killing more than 1,000 people, at least, in Turkey and Syria. I say earthquakes plural because we've just had confirmation of a second high-magnitude earthquake to hit the south of Turkey. Let's get an update, essentially, on what's been happening on the ground, what we know. Ona Ant joins us, Bloomberg's Turkey Bureau Chief, with the latest. Ona, bring us up to speed.
A second massive earthquake just hit Turkey literally half an hour ago. It was the second one in less than 12 hours on Monday. The first one being 7.7 magnitude and the second one being 7.5 magnitude. The second quake was in close proximity to the first one. It took place in the southeastern province called Kahramanmaraş. That's also close to Turkey's border with Syria. And as you said, so far we know at least more than 1,000 people were killed as a result of these quakes in both sides of the Turkish-Syrian border. And according to President Erdogan, Turkey's President Erdogan, more than just around 3,000 buildings have collapsed on the Turkish side alone. So this means even without the second tremor, we would very likely see a dramatic increase in the number of people who got killed or injured because of the earthquake. But we don't know what exactly the second one did. Nobody knows yet. It just literally took place minutes ago.
Truly horrible from a humanitarian standpoint, a massive human cost. There's also the question, Owner, of the economic cost and any disruption to oil flows, for example. What do we know about that?
In terms of international energy flows, the area is home to pipelines that carries crude oil from Azerbaijan and from northern Iraq to Turkey's export terminal in Ceyhan on the Mediterranean coast. After the first earthquake, Turkish authorities said they detected no leaks or other problems on those pipelines, but yet they still halted the oil flows to Ceyhan as a precaution. Now, we didn't know when it would come back, but surely the second earthquake means they're not going to come back immediately. They will probably be checking for any damages on the pipelines.
Ona, thank you very much. Bloomberg's Ona Ant with the latest there. Reporting from Istanbul, but about that series of earthquakes. We saw that large 7.7 earthquake in the early hours of Monday, followed by just in the last few minutes or so, last 10 minutes or so, a 7.5 measuring earthquake in a similar region, as Ona was just spelling out for us. We'll continue to bring you updates from Turkey throughout the day as we track the rescue efforts that are now underway, in particular in the south of the country, in Turkey and across into Syria as well. That is it for Early Edition. Surveillance continues. This is Bloomberg.